What's up, everyone? Good morning. Good morning, YouTube. Good morning, traders. I hope everyone's doing well. Today is Friday. Today is the quad witching event, meaning that futures and options expire both on stocks and on indices. So it's gonna be an interesting event. Usually these days are not very widely traded, right, by a lot of traders. They kind of tend to sit it out and see what happens. Usually there is more erratic movement, more sideways movement, more chop, and for options, more theta bird. So if you're trading credits or selling premium, it could be advantageous to you. Realistically, we're going to see how this Friday shapes up. There is a possibility of a trend, but most likely we're going to see a lot of chop throughout the session as we expire our contracts today. So with that being said, why don't we talk about more about the Federal Reserve? What happened yesterday? We got a pretty large, nasty drop in all equity markets across the board, and we'll see what the future holds here, right? Because there are some worries about the future of the Federal Reserve policy, and they are intensifying, fueling a pretty large sell-off that happened yesterday. The Dow Jones was down about 760 points to log the worst day in 3 months. The S&P was down about 2.5%, and the Nasdaq down about 3.3%. So, as mentioned on yesterday's Wall Street breakfast, Fed Chair Powell could not have been more clear about the long fight ahead to get prices back to stability, and that the Federal Reserve and the central bank will stay on course until that job is done. So naturally, a lot of people out there are looking to outsmart the Fed, but the hawkish tone is not only prevalent in the U.S., but the European Central Bank and the Bank of England also hiked rates by a similar 0.5 percentage point yesterday, opening up a new chapter for the world economy. Whispers of a recession have turned into screams naturally, while the long-lasting big batch of economic data for 2022 is still worrying traders as they begin to leave the office for the holidays. Right, the next few weeks, volume is going to dry out. We're going to see barely any movement realistically, and into the new year I don't see that much crazy trading opportunity. Obviously that could change in the flip of a hat, but a lot of the volume that does come out into the end of the year is lower, which can reverse the trend as we start to see people coming back into office into 2023. So US retail sales also were weaker than expected for November, pointing a sluggish start to the holiday shopping season. The figure, which includes spending at stores, online, and at restaurants, slipped about 0.6% last month compared to the 0.2 drop in that the economists had expected. So at the time, the Philly Fed Manufacturing Index, the Empire State Manufacturing Survey both came below expectations, with both posting a negative reading for December. So don't forget that today we have the quad witching event, naturally, that I talked about, which refers to the simultaneous expiration, if you didn't know, of market index futures, stock futures, market index options, and stock options at the end of every quarter. And that event can lead to higher trading volumes and more volatility. Now, the higher trading volumes don't necessarily mean we're going to see a trend and a lot of movement, and given speculators an opportunity for a quick arbitrage opportunity into last-minute swings, which I am going to be looking for some more credits. I'm not expecting too crazy of a trend because it can flip at the drop of a hat. This time around, we have about $4 trillion in options contracts that are expected to expire, possibly making Friday the busiest season for options traders this year. So let's take a look how that pans out today. Realistically, I'm going to be looking a little more to the bear side, to the sideways side. We had a large drop. Remember, we talked about a key level yesterday where a lot of stops were hidden below 3, 9, 10 on the S&P 500 futures. We tumbled about 40 handles below the area overnight after we slipped. So a lot of traders were also focusing on that to see if we can get that press to the downside. So we're going to be coming into a Fed speaker today, Fed's daily at 12 p.m., which could be fairly interesting amongst the quad witch. But realistically, quad witching is going to be the main event that we're going to be watching for today, and seeing how the market movement is does shape around that. Now, into today, like I said, not that many traders are trading. Options traders are probably going to be fairly busy trying to either roll positions or open up new positions, whatever the case may be, for their current positioning. So if we take a look at the S&P 100 futures overall, we have a very, very key area. We have tumbled now below 3,910s, And that opens up the downside for a lot of potential sellers, which we did see slipping into the 70s or so, right? Just shy of that 69, I believe, which is a very, very pivotal area. 3895 on the S&P 500 futures is the top of a new distribution block, and the bottom of that distribution block is somewhere around 3850. So that means that as long as we can hold the 95s, the sellers are going to be fairly happy trying to push this back down into the 50s. Above the 95, some of the buyers are going to come through. Now, back above that 0910 region, we're probably going to see prices try to come back into the larger distribution that we had created over the past few weeks. So keeping that in mind, right? Trade the key levels, trade the large levels. There's not much else to say. If you're not trading today, have an amazing weekend. I know that a lot of people are going to be sidelined and just letting this thing go. But if you are trading, be very diligent, take smaller size, smaller positioning, less trades. And remember, Capital Preservation Friday, especially on a quad witch. We are going to see you guys next week for another one of these updates. And I hope everyone has an amazing day and take care.